What is going on with this market? So I've been getting a lot of questions lately about just what's going on, right? It's pretty crazy. So a couple days ago, Florida Realtors came out with an article, and the year over year for the Tampa Bay area was 28%. What that basically means is that on average, of course, it's going to be different in certain areas, depending on the condition of the house and things like that. But year over year, from January 21 to January 22, February, we are showing a 28% increase in the cost of the average home. So year over year, the increase is crazy. Originally, of course, everybody was thinking at the beginning of this year that the market couldn't last at the strength that it was for a consistent amount of time. There's no way it could stay that high. So here's what's been going on. So originally, everybody thought that eventually it was going to level out. Then there were some other economic factors, which I won't go into specifically, but that caused a lot of people to start taking money out of the stock market because, as we know, it's been a mess. It's been very up and down. It's not very stable. It's a very volatile market right now. So we've seen a lot of people starting to pull money out of the stock market and then they put it into real estate, commercial and residential, because it's one of the few things that can outpace inflation is real estate. So we're continuing to see this year over year. There also was a projection that was done by NAR, National Association of Realtors, that there was an expected appreciation of, again, depending on the area, 14 to 22% of assets and homes throughout 2022, which means there was a potential, again, varying depending on the area, the type of home, the condition of the home, that home values could increase up to or over 20% again in 2022, all the way up to the end of the year. So what has changed? So obviously it keeps shifting. You never really know what's going to happen in the market. So the Fed increased the amount of the cost of what they lend out money at, which has caused interest rates to go up substantially, especially the last week. It's been pretty crazy. Last few weeks, even month, we saw them a few months ago or late last year where they were at the low where people were getting refinanced at 2.25. People were getting new homes at 2.75. I personally had a client that got one at 2.65 and just heard yesterday, I was speaking to some lenders, somebody that was well qualified. Their rate was 5.25. Now, I know that's different. It could have been 4.75, different factors and all that. But the point is, look at that difference. Now, from a 2.25 to a 5.25, we're talking literally hundreds of dollars a month in your mortgage payment. So we're starting to see, and I could attest this personally, we're starting to see that buyers are dropping out of the market. Before it was because of buyer fatigue with all the complications of submitting multiple offers and doing, battling other people and doing all this. And now we're getting it because they're becoming unqualified. And if somebody is approved for, $450,000 and their debt to income ratio has increased a little bit, but also the interest rates have gone up, now they're approved for $350,000. Anyone in this market knows that you can't really buy anything that's move-in ready, that's a single family home for that price. So people are literally now, because of the increase in interest rates, are getting pushed out of the market because of the debt to income ratio that they have and the interest rates and what their monthly payments would be. They can no longer afford the homes that they were pre-qualified for even a month ago or 2 months ago or 3 months ago. So we're starting to see buyer fatigue on a different level. Like they're just exhausted with not only the process, but now we're starting to see where they're getting completely priced out, where they can't even afford a home in the realm to what they thought, they were going to be able to purchase. What does this mean? This means that for well-qualified buyers that are willing to pay a little bit more on a monthly basis with the higher interest rates, you're going to have less competition. You're going to have less people coming in because a lot of people not only are getting unqualified, but people don't want to pay the higher interest rates. Let's think back. Let's go back 10 years or 20 years or 30 years or 40 years, interest rates at some point were 15, 16, 17%. That sounds crazy, right? Because of what we've seen. But we have to remember that 2%, two and a quarter, 2.5%, that was not normal. That was not normal at all. That was a very, very low rate. So we're starting to see things normalize on the mortgage end and the interest rates start to go up. So my prediction is that we're going to start seeing that only really, really well qualified buyers are going to be purchasing homes. A lot of people that can't qualify anymore for the amount that they want to qualify more, they're not going to want less of a home. So they're going to hold off. They're going to sit back. They're going to try to reduce their debt to income ratio. They're going to try to save more money for a larger down payment. They're going to try to save more money for that appraisal gap. So the market is starting to change a little bit. It's starting to shift. And, based on predictions, what we've seen, people that I've talked to all around the country, this is not something that's going to shoot right back down, right? We're not going to have the up and down of Bitcoin, right? It's not like that in the mortgage industry. So we're going to see rates stabilize at a much higher rate than we previously had in the last couple of years with everything going on. So the longer you wait, the more you will pay. So just keep that in mind. If you're a buyer and you're considering dropping out of the market, it may be better to buy something at a lower price point that's going to appreciate in value so that you have more money and more equity over time to be able to sell that asset and to buy another bigger house. At least you're going to have that equity. If you have the ability to buy and you're wanting and trying to buy and decide to pull out and continue to rent, what you're doing is you're just going to have an increase in rents over the next 12 months. Every time you go to renew your lease, your rent's going to go up. There's a lot of people, like I said, that are putting money into commercial. People are buying apartment complexes, renovating them, increasing the rents. There's a lot of factors that you can't control when you're renting. When you're buying, at least the market will reflect, it's going to do what the market does. On a normal and consistent basis, the market continues to go up. The appreciation will go up. So if you purchase a home now, you're going to have that potential of appreciation of 15, 20% throughout the year and still be able to have a ton of equity in it. So later on, you can level up, pull that equity out, and you can buy that house. Or when you sell that house, you can take the money that you make from that sale and put it as a down payment or, help with the closing cost, cover that appraisal gap or cover that percentage because the rates are going to be higher. The answer is always now. People are like, when's a good time to buy? Now. When's a good time to sell? Now. The answer is always now. Reason that is because we can't predict what's going to happen in the market. So I just wanted to get on here. I know it's a long video, trying to educate some people. There's a lot going on right now all over, and it's going to be back and forth. There were people that were waiting when the interest rates were low and saying, I'm going to wait for the home values to come down. Guess what just happened? You just increased your price point or your monthly payment by a few $100s because the interest rates are higher and the houses aren't coming down in price point. So if you're looking to buy, the best time to do it is still now because you never know what's going to happen in the future. All right, guys, I'm out. If you got any questions, you want to get a hold of me, talk to you later. Bye.